tryna take it down, place for you just scoring minds, best the bar.
All right, ladies and gentlemen, I got your watch list coming in December 31st, 2019, and this is the final watch list and trading day of the year. And with that and what we saw today and what we're going to be expecting in the market tomorrow, it is leaving us with this very, 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 very dark title. So I will give the disclaimer with this before I get into it. You guys have seen with a lot of stuff, I'm usually early or sometimes I'm just right there, and usually I end up being right, but then even if I'm wrong, I end up actually going back and changing it as I adapt to the situation, and then it'll still look like I'm right anyway. So what does that tell you? Take all of this with a grain of salt. I'm just shooting my ideas here with you guys. This is my watch list. We're going over it. So I wouldn't be surprised if things don't necessarily pan out like this, but there is certain factors I'm looking for, certain things I talked about, and since our end of the year prediction really coming into this final day of the years came true, it's leaving us with a unique situation coming into 2020, and that is what we need to talk about today. So I'm gonna go over that, go over what we saw today in the markets. It was pretty interesting in how it relates, and then what we are expecting big, that's tomorrow, and then how this is gonna relate to the first couple weeks here of January, and then I'm gonna go over the plays that we made today, and then the stocks that we need to watch tomorrow. So let us get right into it. You guys know what you need to do. Drop your thumbs up on the video. Make sure you're subscribed, and if you don't know, we are live Monday through Friday, 30 minutes before open. It's the first link in the description, and it is pinned in the comments. We better see you there in the morning. You can watch all of these trades live, source that information. We would love for you to be there, and even most importantly, post your watch list below. Let's source that information. We're going to go over these in the morning, so comment below what you're looking at. What do you think? If you have any other theories or anything, but sourcing information, you guys, you've seen what happened in 2019, the chat room and everything we built. Again, it's a totally free chat room, so you better be there. It's very, very useful seeing you guys grow and source information and all that stuff, man. It brings a smile to my face. I'm very, very excited for 2020, and I hope you guys are too, and the opportunities is going to bring, and just I want you guys ahead in the game. So let's get into it. Right off the bat, let's talk about today and what was so interesting today. Well, I'll keep the daily chart so you can see. We dropped about 1.5 points, a little bit more than that at one point. It was a 0.5% drop. It looked a lot more violent than it really was, but at the same time, it's kind of crazy that we'll even see a 1.5 drop from the S&P, and since we've ran up so many points, it's not as big of a percentage move. So that's one thing interesting, because today was a big day, but when we look at the points-wise in the index, it was pretty small. So this is what could lead to some of the downside we're going to see early 2020, and why it could come and happen pretty quick. So this is even what I said earlier today. I'm going to jump around here a tiny bit, but this drop in this correction that is probably on the way here, it is going to be expected, but it will not be able to be explained. It's going to happen really at random. And I know that may sound like, oh yeah, really, Josh? But at the end of the day, most of these drops that we've been able to attribute to something, whether it be the Fed, trade wars, or something like that. There's going to be a move that precedes it, and it's going to happen in such big increments because, again, these big moves that normally would have been a really big move on the S&P like we saw today, it's really a drop in the bucket. You know, looking back even in October, that 2 points, the candle would have been almost around like one of these sizes. So it was a little big today, but not too big. But then again, once we start looking at some of the companies, there's definitely some rotational elements going on right now that we're going to need to discuss. So that's the first thing. And now with today, this is the setup into tomorrow. Tomorrow, you are going to get the banks and their balance sheets, and now everything with the bank taxes and all that. We are going to see if there's something with the bank. So now this could be one cause of negativity. This could really be a black swan. So I'm going to keep my eyes out for it, because at the same time, we're going to see the biggest Fed repo operations tomorrow. So this could have been kind of letting it cool off until we see some of the money come in tomorrow. Or at the same time, if that money comes in again, you don't need to understand the full scope of the repos just yet, but there is going to be a liquidity support tomorrow. But now if the bank balance sheets cause some level of lack of liquidity, or it outweighs or outpowers all this money from the Fed, which is a very, very big amount. Again, this is the end of the year, the last day to do anything on the books for 2019, and then the banks and what they're coming out with. If any of that is big enough, this could be a pivotal moment. So it could surprise to the downside. I personally think that is doubtful, but we will see. Again, I'm keeping my eyes open on for it. So that's why tomorrow is going to be important. That's why today was important, because this was kind of that step into it. So we really need to see. But again, if tomorrow even is bad and it starts to slip off in this weird way, and then it starts building up one day after another, it could lead to that big decline. And now here's a visual of what I want to explain it to, because when I gave you guys the explanation of my end of the year prediction, I was relating it to 2017. It really was kind of almost the exact same context. So here's again a little bit of a step back. You had the China stuff from 2015 and all this. There was a bunch of negative stuff with China. Then you had the Brexit coming in 2016, and then this was Donald Trump's election, and there was a lot of fear. You saw what the market was at. It was kind of looking how we were looking, kind of coming into everything, just on a way bigger scale. When you compare 2015, 2016, then Trump got elected. It wasn't as bad as people thought, and then the market skyrocketed, and then same thing, 2016. 2017 was just a recovery from all that, hitting new highs of this big melt up, and then coming that November into the last final year, it just skyrocketed up at an unprecedented rate, kind of like we saw here today, where we were like, is this ever going to slow down? That's exactly what we saw this last year. So what I was looking for, and this is what I'm saying for the stock market coming down, is that blow off of the top that we saw pretty much end of January coming into March, April, even a little bit after that too. It caused a decent amount of volatility, but that is what I'm expecting to happen next year. Now, again, we could be wrong, but this is what I'm envisioning here. So now, coming into this final days of the year, I'm going to be kind of cautious here for this last run-up. I still think we got a little bit more gas left to go. We're pretty much here at that top. Things are going to stall out, and that's what we saw, but then it's going to keep coming up. And then now leading into the first few weeks, this is where I'm expecting us to kind of decline in the later part of January, and that's what I think could not, well, really you could call it a crash, but I'd say a little minor correction, but it will still be of a pretty large scale because we've already went up so much. A lot of your favorite stocks are up 30 and 40% as we were looking at in the last 12 months alone, so it's kind of nuts. So pretty much I'm expecting us to resemble this. So now even if we kind of start losing the steam here, that is why tomorrow is going to be key, because if we don't start selling off here and then we come into January again, once the new year comes in, you're going to see money and strategy start to get put on the table. You're going to see more inflows and outflows, and that is going to let us know what's happening. But if it sets up that second leg of this already massive run-up, then we're going to look to end of January, early February for that drop and decline, and that is what we need to keep our eye out for. So that's the main thesis. Let me know what you guys think. Do you think it will resemble 2017, 2018 exactly? Do you think we're going to start selling off here? And what do you think is going to happen tomorrow in the banks? Well, again, that's what I'm going to show you even with some of these companies and how things are. So let us get into the plays. So right off the bat, we have Intel. I still like those, but plays that we made today, I made these two on the Robinhood account. I'm still holding off on stuff. The long terms got slapped. I don't know if you guys saw that today. So even a lot of things sold off today, but it did create a unique opportunity for premiums and the values of stuff too, because some stuff really dropped. Even that Amazon play, I was up a lot of money on that. I was up $500 this morning, and then it went down. So that was one of the plays we made. But the first play I made was Facebook. I told you guys I like this, but I played this within the first 10 minutes. I was trying to look for that 10-minute bounce, and then it was going to come up. That did not really work out too well. I paid $28. It went down 39%, so it's worth now about 14 and 19 depending on the bid and the ask. But it was a 215 call, sell 217.50 debit spread. So again, I'm looking for Facebook to kind of do what Amazon did. You can see it's kind of here near the top. They're operating a little differently, but I'm expecting them to kind of break past this, have all this momentum and euphoria, especially coming into 2017, and make a big move and test that 217. So got a little bit of time on that. That gives us about 2 weeks of time. Or excuse me, this is a next week. So we could have got a little bit of time, but it was cheap. I tried to keep it cheap at $28, but that was the first play. I still like Facebook, and again, this is what I wanted to take advantage of, was we are going to probably cuck here for, again, today. It could happen tomorrow considering what's happening, but it might even give us a very slow start the first day of January, maybe the second day of the trading year. But then I wouldn't be surprised to see things start to kick off again, but it needs a breather. And now when I'm looking at, you guys are going to see across the board with different companies, there's a lot of stuff that is actually kind of sold off, like Netflix and other companies. They've been taking their breathers, but the overall indexes and some of the stronger names are up. It's going to create a push and pull to allow more melt up continuing, because now some stocks are already diverging from each other, but now it's going to allow some stocks to start running up while other stocks drop a lot, and then they're just going to switch, but overall they will catch up with each other. So I like Facebook. That's the first play. The next play, I made this one at close. This is Amazon spread. Again, I had that other big Amazon play. I like where Amazon's at, and again, their earnings is right around the corner. Unfortunately, I would get this play with a little bit more time. You can play it. It would pretty much, we paid $55 for it. You could play one extra week to cover earnings for $77, I believe. But this one, again, the bid and ask was wide. It was about $50, I'd say $55. But this is a 1990-2000 call debit spread. So this one gives us 2 weeks till the 17th. Max gain is $1,000 if the stock goes up to $2,000, and the max loss will be $55. So again, I want my exposure to this, and again, I'm trying to take advantage of this upside, because you got to see pretty much this huge big run up. A lot of premiums shot up in these last few weeks if you missed out on some of those rides, but this one down day, because it literally just stopped the whole entire pace. So think implied volatility. IV is a result, not a cause. IV is a result, not a cause. A lot of these premiums dropped a lot, so those are the plays in the areas that I want to take advantage of. So that's why I made that play, and that was pretty much the only play we made. Other than that, we still have those Intels. I've been scaling in by what, 50, 80 bucks at a time. I still like them. They're both down 15 to 25%. So we're still going to keep my eye out for them, but I like them along with the other chip makers. And again, these are going to be my favorite: Intel, Facebook, Amazon. But next to, I want to watch the banks. They were performing pretty good this morning, and then they slipped up. But you could see they kind of, they gave up a decent amount, but I was surprised where they opened at. But watch the banks coming in tomorrow. That could be good, and that could lead to more stuff. So watch out. I'm going to be watching out for those. Then Microsoft. This is what I mean, laggers and leaders, because now Apple did very, very good today. Apple had a crazy, crazy red to green today. It was so red, and then it just flipped around. But it was looking like Microsoft wanted to do the same thing, but it didn't. But this is that second company right next to Apple that has just been a behemoth all year. So don't sleep on it, because if Microsoft picks up, it'll probably be at the latter end of any rotational. But I really, really like them. So I'm going to be eyeing out for the Microsoft. And then Boeing, this one shocked me. That debit spread we got actually 2 weeks ago. Remember, we got a little bit of time on it, but I believe it expires this week. Yeah, there's 4 days left on the contract. They actually ended up closing up 23%. But at one point in the morning, that spread was up 80. It was a 320 sell 315. But that was surprising how much the stock has decayed. I want to say we got it at a good time, but we really got it almost at the same price. So the stock had a week of decay, and it's at the same price, but it's still holding up. I think that is wild. So I think that's saying something with Boeing, and I would keep a very, very big eye on it. Again, I already have the play. I don't know if I'm going to get more, but the option chain and contract prices are screaming something today. So again, I said you could sell premium on this yesterday, but that still applies. But again, the option market is saying something big on Boeing, so we need to watch out for that. This has been a big momentum mover all year. We've seen it again. It hit that 412. I think 407 was key. I'm surprised it broke there. Watch to see if it starts setting a downtrend. That's usually what it does. But if it doesn't hit this downtrend and kind of bounces up from here, it's going to start looking like AMD. If you guys remember, that's what happened here. It hit that upside. It kind of came down a little bit. But the fact that it based, that's what allowed that next big run up on AMD. So Shopify does the same thing. That's going to be good. But again, do you see look how long that took with AMD? That's what we might even see with the S&P. You got to give it time to kind of come down and base up at a certain level, and then we'll see that next leg. But watch all those. Those are going to be my favorite ones to watch tomorrow. Then we still have the AMD. That's a good one to watch. But now also with all this stuff with the banks, watch TLT, because this is at the same level before the last melt up in November when we made all those videos, saying that the market was going to go up. So it's interesting to see how the bond market has actually replied to it. But see, bonds caught up with the SPY, and it's been following along. But now you're seeing there's a pretty clear divergence from the beginning of December, and that was really the next level of the melt up. So now the Fed is involved with this in some of those purchases and that yield curve control. So it's going to be interesting to play, but watch TLT. That's going to be interesting. And then next, in the same sense, I'm also going to be watching transports, because they did not have their melt up, and this is a clear lagger. So that could be an opportunity. But also at times, I wouldn't be surprised to see the S&P now kind of base around the level and converge with transports and then maybe some other industries and then continue to go up. But watch transports in general. And that being said, too, watch FedEx. Well, that was a big earnings. You guys could watch UPS, but I still think they're going to be a pivotal company. Also, some of the railroads, but I preferably FedEx and UPS. But then now Home Depot, I like. This is now, the stock moves in waves. So if it starts to make big moves down, I wouldn't be surprised to see it test below that 215 range. And again, that could be great for some premium around here. So I'm going to be looking at some of that tomorrow, as well as now McDonald's. McDonald's looks a little harder to play because it's been doing this for a month or 2 months now. It's a lot more difficult to hit. But you guys see, that's been premium selling heaven. But we've saw the premiums and credit collaterals have been awful. So I like Home Depot a lot better because there's more uncertainty. Then, like I said, AMD, and then Amazon is what we're going to be watching for. Then finally, moving to our last chart here, Netflix is going to be one I'm watching, because this is where I've said they've hit the top. You guys see, this is, the first or second day from hitting the top and going down. But there's some companies that have really kind of sold off, and you can see they've made some bigger moves. I think AMD kind of looks like that's their third day. Here's their second day. So watch for those in rotations. But now, a lot of people talked about Neo and all that today, but I'd rather just look at Baidu, and I'd keep an eye on some of these Asian companies. I'd want to watch Baidu, and then Baba made a big move today, but they've kind of been a behemoth. So if they kind of move around here, this could either be a good premium stock, catch it on the downside, or if it does continue up, this has destroyed the premiums. And that's one thing too, how we're setting up with these debit spreads and what we're looking to do. I'm trying to get some of these big movers. I'm trying to let them get cheap, and I'm trying to take advantage of all of these highs, and then now this pace getting just having the brakes pulled on it, and that pulled a lot of the contract prices. So there's going to be deals over the next few days, but then if things start to switch, they could go up really fast. And now that being said, let me give the other side. If there is deals, that means there's uncertainty, and people are going from certain to uncertain right away. It's going to fling the option prices a lot. So again, a lot of people got crushed, and that's because we've seen some options be very, very stable, and this destroyed it. But now control this with controlling balances. That's why we played $20, $50 on a lot of these plays. So keep your head in the game, baby. We're going to close out this year strong, and it's looking good. So I hope you're ready, baby. But that is your watch list, ladies and gentlemen. Make sure you're hydrated, healthy, ready to go. Make sure we see you there in the morning. Make sure you post your watch list, and I need your head in the game. You got to keep it small. It's your last trading day, so don't force it. Let it come to you. Be prepared on both sides. Take every single tool and investment strategy you learned from this year and apply it, and don't forget about the long term. And understand, baby, the code has your back. So as long as you hear, source that information, we're going to hit it either way, baby. Let's move with it. Don't force it. There's going to be another week after that and another week after that, because clearly we've already made it to the end of the year, baby. So let's go.